Hi, this is Akmir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 6th of July, and still holding on to the uptrend line, the 2-year uptrend line in the FTSE 100 daily chart window. We basically were looking for 70.50 or so to hold on an end-of-day close basis. Didn't quite make it, but we've actually held the line there, and that's currently around the 70.50 level, overshot slightly, but still intact in terms of that uptrend, which doesn't feel like an uptrend, obviously. We've got a line of resistance there from June. That's currently around the 72.20 area. So an end-of-day close above that could take us back to the 200-day moving average around 73.50. Still looking for consolidation between that 2-year support line and the 200-day moving average in the near term. It's probably quite a big deal for this market to break out either way. On the downside, if we do break to the downside, it would be down towards 6,800. Otherwise, the 200-day line, and then obviously back to the best levels of last month, which seem a long way away now. Moving on to Bitcoin, which has its own issues at the moment. The service providers are apparently going bust left, right, and centre. But here we've got this market still in that range between 19,000 and 22,000. Today looking a little bit better, but really until we break the outside of that range, either 22,000 or 19,000 on an end-of-day or weekly close basis, still in a state of limbo. On the upside, the old May resistance and the top of the channel from March at 25,000. On the downside, possibly as low as 15,000 by the end of this month, which is the March support line projection. Moving on to the stocks, and Contango, much followed stock at the moment, so people got lots of hopes regarding this situation. Here we've got much higher support for this stock, 5.5 pence and above over the last month or so, which is encouraging. A bit of a dance now above the 50-day moving average. It's around 6 pence. The longer we stay above that, the greater the chance of trying to break that February resistance line around 7.25 and the last June peak. If you're looking for a proper momentum trade, really, it's above 7.25 to take us back to 10 pence, which is the trade to go for. Otherwise, perhaps any dips towards 5.5 pence may be appealing in terms of buying the dip or buying support. Moving along to Eurasia, where just the first signs on the last coverage yesterday, just the first signs that we're about to turn. Very oversold here. Bullish divergence versus the February low there, so lower than February, but the RSI is slightly higher, so that's something to cling on to if you're a fan of the shares. Otherwise, it looks as though we bounced off this support line from March, and above that, I suppose the most likely scenario would be for an attempt at hitting the 50-day moving average at 7.25 pence over the next 2 to 4 weeks. But I think at this point, that's the most optimistic take on this particular chart, even though we were coming back from very oversold levels under RSI 20. Moving along to another stock, which has been a bit of a head-scratcher for the bulls. A rather painful trajectory in the recent past with Midatech, especially that bull trap through 15 pence that we had at the beginning of last month. Current situation is that we've got a double bottom there with the 8.25 pence low of last month, which is encouraging. Also encouraging, perhaps the most encouraging aspect here is the way they've got bullish divergence in the RSI window. So lower low for July, but higher RSI trace versus that March low and the RSI low that we had down to around 10 on the RSI scale. So very oversold there. So maybe we're due for the kind of spike that we saw back last month, even if it's only towards 10 pence or 10.5 pence near the 50-day moving average. On to the stock of the week, which is perhaps the most unlikely candidate for being the stock of the week. But here we've got Nanosynth. I was grumbling yesterday that we didn't quite get to the 200-day moving average. We still haven't quite got to that. That's around 0.64, the high today 0.62.5. But plenty of points here for trying, and especially in this rather dismal market that we have at the moment. Above the old May peak, around 0.5 pence, we could still get up to that 200-day moving average. Best case scenario here, I suppose, would be a move up towards 0.8, but that looks as though that might be pushing it in the near term. The other glimmer of hope provided here is the way that the 50-day moving average is now rising. When you see a 50-day line rising near the lows, which is obviously where we are at the moment, that can be the sign of a major change in trend, and obviously so far Nanosynth has delivered at least an initial change of trend. Moving on to non-standard, which is still bouncing along the bottom here. Had a gap higher, filled the gap, and then we bounced back again, so that's slightly encouraging. Need to get through that 50-day moving average at 2.25 pence to give us our best case scenario target around 3.5 pence over the next couple of months, but certainly this is not the most ideal recovery situation, especially in current market conditions. But above 1.5, there is the glimmer again of recovery for non-standard finance. Onto a stock which has bounced quite well today so far, Parkmead with a gap to the upside. We've got a rising trend channel here from back in October, and the longer we stay above the floor of that channel around 42 pence, the greater the chance of a move towards 65 pence, retesting October resistance and hopefully even breaking April resistance around 60 pence. But first sign of recovery here really would be an end of day close above the 50-day moving average. That's around 49 pence where we are now, so an end of day close at current levels or higher would be helpful, as we haven't been above the 50-day line since the beginning of May on a sustained basis. Moving along to Supply Me Capital, where the CEO remains as enigmatic as ever. Here we've got a situation where we've got a bullish divergence line, which is something to hang a hat on. Not everything, but not bad, as far as just suggesting that on this occasion we might see a little bit of a run up for the stock. Plenty of support here around the 0.06 pence level multiple times since March, and we had that final dip, bear trap dip in April. The view now with these very positive candles that we're getting over the last few days is that we could get to 0.1 or 0.11, even if that's not the end of the extended bear run we've had in this stock. Finishing off with Wishbone, which bounced off the rather obscure uptrend line there from April, albeit with a slight glitch with a one-day fall below it, but above 8.5 pence, or in this case the line's now up to 8.8 pence. We could see the shares head back towards 14 pence if we get a decent end of day close above the rising 50-day moving average at 10.6 pence today, which we may do. Rising 50-day line can be a positive, as I mentioned previously in this recording. That's it from me today. More updates tomorrow.